right. Welcome, everyone. Happy Friday, this nice, cool day where it's 110 degrees most of the country. But luckily, where I live here in Hermosa Beach, it's a balmy 73 and a little overcast by the beach, which is kind of nice. We are so excited. I'm so excited to have this podcast, or not. Well, it's kind of a podcast, kind of a live stream. This is a live stream, but I have a podcast, so I'm used to saying podcast. So forgive me there. But I'm Brett Henderson. I'm the founder of Strategic Wealth Endeavor. We do wealth management and business consulting for veteran entrepreneurs. So we welcome you. We're going to go around the horn. I'm going to introduce our speakers. Then I'm going to tell you what not to expect today. And then we're going to talk about some ideas to help you and your business ensure that your entity structure is not costing you unnecessary taxes. Why give it to the government when you can keep it for yourself, your family, your loved ones, and your philanthropic causes? So again, I'm Brett Henderson. Joining me today will be the lovely Laura Harper. Laura, hello.
Hi.
Tell us a little bit about you, Laura. Thanks for being here today.
Hi, my name's Laura Harper. I am a tax consultant and I work side by side with Mike Fassell. So I am your first contact through this process if we engage together. And I look forward to chatting, giving you guys some good knowledge, I guess.
Yes, Laura, thanks so much for being here. And if you're listening and you have a question, comment, please put it in. I'll see the comments coming in on LinkedIn. We'll put them up on the screen. So you're welcome to ask questions. This is meant to be interactive. So please reach out and say hello. And Wendy, I'll come back to you in a minute. But Mike, how are you, sir? Tell us about you.
Excellent. Thank you for having us today. I appreciate everybody's time.
Thanks so much. And you are?
I am a tax attorney. I'm a CPA attorney. I've got a master's of laws in taxation. I'm a member of the Illinois Bar. I'm a CPA in the state of Georgia, and I'm also a member of the tax bar. And so I'm 52. We've been at this for 27 years, working with closely held businesses, doing tax strategies. And our focus is entity structure, which you just mentioned. That lays the foundation for most folks. But we also cover in depth retirement planning, succession planning, estate planning, but we are not product people. We don't manage money. We're not licensed to sell financial product, but we are advisors in those areas from a tax perspective.
Awesome, Mike. Thanks so much. We're going to hear from you shortly, too, about some of these strategies or ideas. And then Wendy Hurley, welcome. Good morning. How are you?
Good morning. Thanks for having me. Appreciate it. So I'm Wendy Hurley. I am a real estate investor. And I am a client of Mike and Laura's. They've been amazing to work with. So just wanted to share my experience with you.
Awesome. Looking forward to hearing your stories. So Laura, Wendy, and Mike, thanks so much for joining me today live, and our guests out there. Thanks so much. A couple administrative things I have to throw out there. So this session is meant to be educational in nature. This is not actual legal advice. This is not actual tax advice. This is meant to be informative, entertaining, and educational only. I have to say that to keep compliance people happy. If you would like to go through your personal situation and receive individual advice, that is possible, but not during this session. You can reach out and say hello. Oh, Jesse James, what's going on? This is good. So Jesse James is a colleague, also a veteran, also a realtor in California. So Wendy, I think with what you've gone through, this could be very, very beneficial to Jesse and his clients. So Jesse, thanks for being here, brother. So again, the compliance part, this is just educational in nature. If you have specific questions where you would like individual personalized advice, please reach out to myself or Wendy and Mike, or Laura and Mike together. Potentially Wendy, if you're looking to invest in real estate, right? We can go there too. So I just have to throw that out there. And one thing I do have to throw out before we continue, what this is not. If you are a CPA, we welcome you being here. This is collaborative in nature. No one of us knows everything about everything. And I find the best way to serve our clients is a collaborative approach. That means I have some experience in one area, Laura has experience in another, Mike in another. And if we collectively take our experience and work in Wendy's best interest to provide her the best outcome possible, we win. How do we not do that? If we have an ego, if we think I know everything or I know everything already, I don't know, I have an amazing mustache, does that make me always right? No, right? So being humble enough to check your ego at the door when you're walking with your jacket, and any collaborative engagement like this is the way to be. I was reaching out, I'll tell you a story. We had a CPA that I reached out to, invited him to this, and the CPA came back was, already do that. Okay, great. Well, let's get together and have a collaborative conversation. Oh, I'm busy and my rate's 900 an hour and I do this. Like it was just not, you knew that that CPA unfortunately was focused on themselves and their money more than their clients. And professionally, if we focus on our clients' outcomes, the money will come because you're providing massive value. So again, in any environment, if you work with any of us, it's going to be collaborative in nature. So I just want to throw that out there. So who we got? There's Robert. Let's say hello. Hello, Robert. Thank you, Robert. I appreciate you liking my mustache. It's taken. It kind of came from Movember and it stuck. So I appreciate that very much, Robert. Thank you so much. At least someone's listening, right? We're getting some value out of it. Some mustache comments, so it's good. All right. So I'm going to turn over to Mike. So Mike, tell me I guess let's start with this. Tell me about what you have found over the last 20 years and what led you and Laura to come together and start providing this advice, and then how you connected with Wendy, and we'll kind of talk about that. So Mike, I will turn the floor over to you, sir.
Excellent. Thank you so much. Appreciate everybody's time. Like I told you, I'm a tax attorney, and I wish I could tell you that I invented this type of business strategy planning, but unfortunately I did not. I was trained how to do it. One of my first law firm endeavors was a CPA attorney tax firm, and they specialized in closely held business tax strategies. And so I was basically trained from right out of the gate on how to do this type of work. Entity structure really lays the foundation in order to create a tax strategy that will create an annuity of type savings. Most closely held businesses are advised to structure themselves as a flow-through entity, because flow-through entities avoid corporate level taxation. And we agree with that. You absolutely want to avoid corporate taxation as a closely held business owner. However, there are some pitfalls to being only utilizing a single entity. And single entities, especially flow through, such as partnerships, S corporations, and sole proprietorships, have got some limitations with regard to their access to statutory tax breaks. As a result of that, if clients will take the time and energy to educate themselves or align themselves with people that specialize in this area, they can learn how to run a dual entity structure and take advantage of the separate rules that run to the separate types of companies. And so let's quickly review those. A single member LLC is taxed by default as a sole proprietorship. A sole proprietorship is also the way you're taxed if you don't have any entity at all. If you just hang out a shingle and never set up a business entity, you are taxed as a Schedule C sole proprietor. You are also taxed as a sole proprietor if you are an LLC member and you're a single member LLC. Another option. If you're a multi-member LLC, then you default to partnership rules. Partnership rules and sole proprietorship rules are very similarly taxed. The benefit is that it's a flow through, which means it flows through from your corporation to your individual tax return. The downside to sole proprietorships and partnerships is they are subject to self-employment tax on all of their earnings. So the third option is an S corporation. And whether you're an incorporated business, meaning you have INC behind your business, or you're an LLC, a limited liability company, you can elect to be taxed as an S corporation, and it's fairly elementary. An S corporation, in my opinion, is superior to sole proprietorship status or partnership status because distributions out of an S corporation are not subject to self-employment tax. Secondly, under the current law, which is the Trump Tax Act, there is a 20% deduction for flow-through profits, and that includes sole proprietorships, partnerships, and S corporations. So you definitely want to be a flow-through entity. And the vast majority of business owners out there that are been advised at all are correctly chosen to be an S corporation for their operating entity. Whether they're an incorporated business or whether they're an LLC, most of them show up in our office already having S corporation status. If you are a business owner and you haven't elected S corporation status, that's the first place that you need to start and review. Okay. Now then, if you're a single business owner, meaning you have a single entity and you've correctly made the choice to be taxed as an S corporation, then you've gotten good advice. Okay. Now, if you would take the next step to look at some other opportunities, such as C corporations tend to be publicly traded companies. Publicly traded companies have the liquidity and the wherewithal to lobby Congress and to enact statutory tax breaks. However, if you own more than 2% of the equity of a flow-through entity, which is not a C corporation, you are precluded from using an entire litany of rules, fringe benefits, and basic statutory tax breaks. The reason that is because they're giving you a break by having a flow-through entity and avoiding C corporation or double taxation. Taxation. Now, C corporations would elect to be S corporations. However, you can only have 125 shareholders. Once you have 126 shareholders, you are precluded from S corporation status. So C corporations, since they trade on publicly and have thousands and thousands of shareholders, they all by definition are going to be C corporations. Now, C corporations have the liquidity and the tax expertise to hire tax experts, and they have a very low rate of taxation because they get good advice. Unfortunately, in the closed-sale business community, they're mainly represented by the CPA community, of which I am a CPA and practiced in CPA before I became a tax attorney. The benefit of a CPA is that they are very astute at tax compliance, which is doing tax returns, and I was trained to do that work myself. Where there is a disconnect between the closed-sale business owners is that the CPA community is hesitant to give you entity structure advice, because by definition, entity structure advice is legal advice. But a lot of the closed-sale business owners don't realize that when they engage with the CPA to get their tax compliance done and to get tax advice, they are typically not going to entertain discussion with regard to entity structure. Whereas a tax attorney, the first place we're going to start is entity structure, because the different types of entities have completely different rules. Sole proprietorships are different than partnerships, that are different from S corporations, that are different from C corporations. And so blending those rules to the closed-sale business owner's advantage really lays the foundation in order to create a tax model that will create an annuity of tax savings for the duration of the business owner's career. Brett, I can go on and on. I can.
So let's know, that's your job, right? Your job is to have the attention to detail and the wherewithal to explain and articulate a complex subject and make it simple. So I appreciate that. So I'm sitting here, I'm a business owner. I have an S corp, and everything you just shared sounds like a lot, right? It sounds intimidating. It sounds complicated. Why would I want to go through this? Why would I because people hate change. I hate change, and I hate unnecessary work, right? So what would be a trigger for me as a business owner, if I'm looking at my business, I'm looking at my P&L, I'm looking at my net profits, why would I even want to have a conversation with you?
Number one is the C corporation, the C corporations, they continuously lobby Congress and create tax advantage statutes, but our S corporation community, by and far, is precluded from using those rules. And so in its simplest form, if we can add a C corporation to your entity structure mix and help you manage that to avoid your likelihood of being subjected to double taxation, I then can help you review and bring to bear tax statutes that are designed to be beneficial to the C corporation, and that can give you an opportunity to extract money out of a C corporation completely tax-free. That's the first benefit. Right. The next benefit is to make sure that you're taking advantage of other areas where you're restricted, such as medical expenses is a big area. If you are an S corporation owner, you are not even allowed to deduct your medical premiums in your S corporation, whereas C corporation rules don't have those limitations. So there's a whole there. I can't begin to explain today how many different avenues are opened up if you have a C corporation in your corporate structure mix. However, it's a little more complicated than that, of course. You cannot set up a new entity with the primary subjective intent to save taxes, which is a silly rule, but it's a very real rule, and it's one that you need to be cognizant of. And that's a reason that you want to have advisors to help you do this, to make sure that you don't make a misstep, and that's an easy misstep. So it's easy for people to listen to us today and say, oh my goodness, I need a C corporation. There's a whole bunch of rules Mike says I can use if I have a C corporation. However, you've got to be instructed that you can't, if you go out and set up your own C corporation, which is not hard to do, you go to the Secretary of State of whatever state you're in and set up an entity, and it's really not hard. However, if you then were to get audited and the auditor says, sir, why did you set up this, or ma'am, why did you set up the C corporation? And your answer is to save taxation. That's a problem, because you can't say your primary subjective intent cannot be to save taxes. But if nobody explains that to you, then by definition, you would rationally think that's why I did that. So the reason that we set up entities is for asset protection. The S corporation that predominantly most of you already have, unbeknownst to you, perhaps, that was set up to segregate your personal assets from your operating business risk. So that S corporation, where it's an LLC or an incorporated business, was set up in order to take advantage of the taxes, but it was initially set up to protect your home and your personal investments from the risk of operating that business. And the same is true if we set up a C corporation. We have to follow those same rules. So we need to identify what the C corporation is going to do. We can't just point to the C corporation and say we did that to save taxes, or unfortunately, they will disallow all the transactions between that company. So the next question, if I were you, would be, why do we have such a silly rule? The reason that we have such a rule is larger corporations will create contingency-based transactions in order to effectuate tax outcomes. Okay, so for example, a corporation can enter into a contract with, say, something as remote as lightning striking. And so they say, if lightning strikes, then XYZ financial transaction is going to take place. That's technically not illegal. However, if you orchestrate such a deal with two owners in a business that have got differing tax postures, such as a bank and a closely held business owner, the bank needs gain because of all of the Sarbanes-Oxley rules and all of the restrictions that came into place after 08 and 09 and 010. So if we created, say, a partnership with a bank as a partner and a closely held business as a partner, we could create a contract based on the probability of lightning striking. And if you did that over a 2-year period, then partnerships can allocate gains or losses any way the partners agree. So if we created a contingency-based transaction based on lightning striking, and we're a accrual-based taxpayer, I could allocate in year one the potential of a gain outcome based on probability of lightning striking to the bank, which they want. And lo and behold, in year number 2, lightning doesn't strike, which we had a feeling it wouldn't. And now I've got to undo that transaction. So now I have a loss in year 2, and I allocate that to the closely held business owner. The government,
Mike, I'm going to cut you off because you're good, you're smart, and you're going. I love it. I'm sitting here, and the people listening should be business owners, right? Myself. So you are going into the nuts and bolts, which is good, and I'm glad you know your stuff, because that's why people engage you.
Right.
Hopefully, they don't pay you by the minute, or not. And now we see why you're really long-winded, right? That's a good one there. But that being said, if I'm a business owner, what level of profit should I have where this conversation makes sense? Is it 50 grand? Is it $500,000? Is it 2 million? When does it start become the benefit to go through this? Because if you're setting up a C Corp or another entity, there's a cost, and there's time, and there's effort, right? And you got to make sure if you set up that C Corp, it has a business function. So if you're transferring your administrative, your marketing, your sales force over to the C Corp from the S Corp, there's work involved, right? And there's accountability and accounting to make sure it's done properly, to make sure that if you're audited, it's not blown up. So that being said, what is a reasonable amount of profit and or taxation where it makes sense to start exploring this option?
That's a great question, and one that we entertain quite frequently. And more often than not, people say, how much gross volume do I need before I need a tax attorney? The gross volume has nothing to do with it. It comes down to profitability. If you're in a business with a 90% profit margin, then you don't need any gross margin. If your business has an 8% margin, then the margins are what makes the difference. Okay. Now, it also depends on where you're at in the life cycle of your business, right? So if you're just starting your business, and you know that this business is going to be profitable over time, it is more advantageous for you to establish a relationship and engage a tax professional early in your life cycle, because every year that you take advantage of this type of planning, it makes money. every single year. I cannot tell you how many folks come to me as a tax attorney when they're ready to retire and they're thinking, I'm about to sell my business. I need a tax attorney. And we will do that regularly. However, we're also going to show them how they should structure the business until we can get it sold. But I hear all the time, gosh, I wish I'd met you 20 years ago. And so in my opinion, it is the projection of the profitability of the company that makes the decision of if you should hire a tax attorney.
What's that number though, Mike? Give me like, is it again $100,000?
I would say it needs
300.
It needs to be
start making sense?
Over $40,000 in annual taxes. Now, but let me preface that. A lot of people don't realize how much taxes they pay. They just look at their 1040 and look at the tax line and they say, that's my tax liability. Your tax liability is way, way higher than that. There's not only federal taxation, there's state taxation in most states. There's also payroll tax, which is quite expensive. We even look at things such as sales tax exposure, but that's limited to certain industries. So more than likely, your estimation of the amount of tax you pay is understated in your own mind because the taxes are hidden because they're in your W-2, they're on your federal return, and they're on your state return, as well as other state and local taxes. And so as a general rule, once you pass a $40,000 a year tax liability, and that would encompass all taxes, but if you look at your tax line on page 2 of your 1040 and it's over $40,000 and you're running a growing business, then you want to engage somebody. Now, I will also tell you that most people that do the type of work that we do, that their fee structure is based on a value add. So a person that pays $400,000 annually in taxes is typically going to engage a tax attorney at a higher rate because their business is more complicated and the tax analysis more complicated, but they're also going to get a much bigger bang for their buck. So I would advise you to get involved sooner than later. And the quicker you enact this and the longer the duration of your career cycle, the more advantageous it is to you, if that makes sense.
Makes perfect sense. Let me ask this question. So Ronaldo had a question regarding nonprofits. Any thoughts there about nonprofits versus the for-profit entity structures?
And we get this discussion a lot. And there's a ton of case law in this area. If you're in an industry that bids work, if we can bid work as a nonprofit and avoid taxation, we will underbid everybody. Well, now, you've got to be very careful in the nonprofit area because you can get into some trouble. If you're running a nonprofit and you're attempting to run that as a for-profit business, there is unrelated business income. And if you are inuring to your personal benefit nonprofit dollars, not only can you lose your nonprofit status, but you personally can get in trouble. And so I advise people not to play games with nonprofits, but if you have a nonprofit purpose, such as churches, people that raise money for medical endeavors, there's a whole litany of options that
veterans causes,
of course. Those should be nonprofits and they're out for the public good, but you cannot inure for private benefit nonprofit dollars, or it will create a big problem. And it has been done on broad scales. In fact, when you're getting a master's of laws in taxation, New York University bought a handgun manufacturing facility as a case study to educate their students. And it was determined that no, that's outside of the scope of your nonprofit as an educational institution. And there was a big, and so everybody studies that and when you're learning this area. And there's a whole litany of cases along that line. So be careful with nonprofits. And if you have a nonprofit purpose, that's what they're there for, and take advantage of it. If you truly are a for-profit business, don't attempt to take advantage of nonprofit benefits to inure to you personally.
So in summary, your answer is if you're a nonprofit, it still makes sense to have a conversation.
Absolutely. Yeah. And we do that quite a little bit. And now educational institutions, we for some reason, we get a lot of referrals for those guys. Our last big one is we had some folks that were going down into South America, and they were teaching English and teaching Western culture and gearing people up and to create opportunities in those markets. And we helped them establish a nonprofit. and they were trying to replicate their system among other folks in South America. But it met a nonprofit status without a doubt. Now, that same entity also wanted to provide a for-profit as to selling them their books and materials. And so they had a for-profit, which was their selling of their materials, and they had a nonprofit, was the educational purpose. And so there's nothing wrong with doing that as long as you're keeping a divide between the two.
Okay. Well, this is good. And a question just came in about real estate. Not really a question, more a statement about real estate. We're going to come to that pretty soon, and especially with you here, Wendy. But let me ask you, Laura, you're out there as the intermediary. Mike has his head down in the weeds, ideally, and he's doing his work, earning his fee. And when you're chatting with someone or a business owner, how often do you hear, Laura, oh, I already have a CPA. Oh, my CPA is handling that. And so let's talk about that. So everyone here has a CPA, right? If you're a business owner and or you are a CPA or you're an enrolled agent, your EAs, we're including you guys too. But if quote unquote, I already have a guy or gal or person, why would I even want to chat with you, Laura?
I hear it all the time. And I love that statement. I'm like, hey, if you love your CPA, we love your CPA, because what we do and what they do are totally different. So our service is an extension of your taxes. We are an addition to your tax team. We work with your CPA. We work with your accountant. Together, we become the ultimate tax team. So when I hear that too, I also say, what is your entity structure? And then who told you to become that entity? A lot of business owners, they're the ones that come up with their entity structure. So, when we have our consultation and we talk, I'm asking those deeper questions, and we invite their CPA onto our meeting when we do an analysis. We invite their CPA when we meet with clients in person. So we want this to be, again, collaborative. We want everyone to be on board. We want everyone to understand the process, and we want them to know that we are friendly territory. We're not coming in to do what they do. We don't want compliance. We don't do compliance. We really just ultimately want to put in front of the client something that they might be missing out on, that they could take advantage of. And that's where a service like what we do comes into play.
Right. And so I'll jump in here too. So I even chat with my own clients because I'm on the wealth management side. I come into play after the work's been done and there's cash left over. Mm-hmm. So if there's a way to bring in another member to the team to potentially help that business owner lower their tax liability or continue to build wealth or protect some assets, I may not have the outcome figured out yet, but if there's a potential, it's worth a conversation. So that if you are a CPA and you have clients right now that are paying over $40,000-$50,000 a year in taxes, here's a value add for you as their tax advisor. That, hey, I have a relationship with a team. We're going to take a deeper look at your scenario. I handle the tax work. They're going to try and see if we can help you mitigate more of your taxation. There is a little time allocation there, and I will ask: is there an upfront cost to take a look? I'm just curious because there is
a small admin fee. There's a small admin fee to do the analysis. Correct. Right,
and you get what you pay for, right? So free advice is generally free advice. So if you're paying 40,000-50,000 plus in taxes. I'm generally, most of our clients are in the several $100,000 a year in tax range. It makes sense to pay a little bit to see if you can save a lot, right? Absolutely. So I think that totally makes sense. Another question go ahead, please, Laura.
An added bonus, if you become our client, we give you that back in the implementation. So we credit that back. So
the fee pays for itself and then some, right? If there's value. Right. The burden of proof is on us to deliver massive value. Then it kind of makes sense. Mm-hmm. So does anyone want to take Ronaldo's question? And then we're going to ask about how you guys met Wendy, and we're going to actually go into a testimonial. And so we'll go there. So Mike, or does anyone want to chat about Ronaldo's question?
Okay, I want to rent a home from somebody else. Can I rent that home under my LLC? Absolutely. What are the tax benefits of that or not? Well, if it's business related item, then that rent expense is a deduction to you, right? And so, yeah, absolutely. You can provide any business function, whether it's renting real estate or any other business function within the context of your LLC. And if there is business purpose for that rental expense, it's then deductible. Now, if you're going to vacation at the beach and there is no business opportunity taking place, that's a personal item. That's not then deductible under your LLC. And so, and I will tell you this, under the Biden inflation piece of legislation they just passed, there's $80 billion earmarked to be funded to the IRS. And the scuttlebutt in the tax world is a bunch of that money is going to be used to hire 80 some odd thousand additional auditors. And so entertainment related items is an area that they're going to look for. Further, under the current law, under the current Trump Tax Act, entertainment related items are currently non-deductible. So you want to make sure that you have business purpose for any expenses that you utilize inside of your business.
100%. Well, thanks for clarifying that. And that was meant to be educational in nature, right? That's not advice. That's education. We're providing education. That's all we're doing here today. All right. So Wendy's been quiet. Wendy, welcome again. What I'd love to do now is transition over to an actual testimonial. And if Laura, you want to chat about how you and Mike met Wendy, and then we'll turn over to Wendy and let Wendy articulate a bit more about how she engaged with you, I think that'd be great. So Laura, why don't you start the conversation with how we met Wendy?
So Mike and I did a webinar for real estate investors, and Wendy was reached out to us with a few questions, and I got to meet her one-on-one after that webinar, and then she became a client. She went through the process and had an analysis done and became a client. So that's how we met.
Awesome. So Wendy, thanks again for being here today in the non-professional space, but you're using a user of the services. Mm-hmm. What was the trigger for you, number one, to attend their webinar? And then what was the moment where in your mind, like, I should probably chat with them? Do you mind disclosing that or sharing that with us?
Yeah. So everything you've talked about so far is exactly what I've been going through the past couple of years. So I was in software sales for 30 plus years. I left that industry to follow my passion for real estate and design. And so I got into this 3 years ago, and I got a CPA. Great. I just assumed that CPA is going to help me take care of all of my taxes and know what I should be doing. But then I come to find out, I don't know if I need an LLC, a C Corp, a S Corp. There's all these things that came up that I had no clue what they were. I wanted to make sure that I was doing the right thing. I'm, following the rules, and I'm also not losing money. So I often attend these real estate, investment webinars. This particular one was an old colleague of mine, and I happened to be sitting in on this, and everything just hit home. The whole entire presentation that Mike and Laura presented was exactly what I needed, because I felt like I was super stressed out because I knew I wasn't doing the right thing as far as my taxes, and I didn't know how to even go about it. I didn't know the first thing. Again, I thought the CPA would be able to cover it, but then I understood it's a whole new area that you have to have that other layer in working in partnership with your CPA and the tax attorney, because the tax attorney advises you. I was able to set up my entity, LLC, C Corp. He talked about all different kinds of ways that I was going to be able to protect my assets, which gave me that peace of mind that I now have running my business. And I'm no longer stressed out, working with them. So they're really able to help me get everything situated. And moving forward, I feel like I actually, can breathe doing my business versus am I doing the right thing? Like renting under my LLC. That's something I do now as well. So they're able to give me a lot of good advice to give me that peace of mind.
Let me ask you this. So you said you had a CPA, or you still have a CPA. Mm-hmm. And was there a conversation with a CPA where they're like, I'm just doing your taxes, I'm not giving you, because I'm finding a lot of accountants, and this is meant to be a bad thing, just they know their rule is completing the forms, right? Mm-hmm. Data comes in, I put it down, and the end number is the end number. Right. To look at strategies to take the time to learn strategy to try and reduce that bottom number. It's another skill set. It's another role. Mm-hmm. And some CPAs and or accountants or tax preparers are just tax preparers, right? And they prepare the taxes, they do their job, they take a fee. but then you've got the actual, I'll call it tax management, where you're managing the taxes more than just preparing taxes. But you shift from just doing tax preparation to helping a client manage their taxes. It's a different place and a different skill set. And it takes a different level of time and investment to build that skill set to have that. And I find through conversations with my own clients, a lot of accountants don't have that. They don't know all the different opportunities and scenarios where they can bring advice, valuable advice to their clients to help them legally lower that tax liability. So was there a particular conversation you had with your CPA, Wendy, where you realized that they're more or less preparing your taxes and they're doing a good job, but they weren't coming to you with ideas to try and reduce that tax liability? Was there a trigger or a conversation that you remember?
Not necessarily a conversation, more of a, going through that experience of working with the CPA and then starting to understand that I really don't think they have the capacity to be able to be on top of all of the rules that could change every single year, and be able to provide advice on your entity versus managing and preparing the taxes, because there's such a big workload. I think it's two completely different jobs, from what I saw. I think it's more of a capacity issue. My CPA is great, and there's a little bit of advice, but it's not. I don't think there's the knowledge there about all the different tax laws, and then there's different tax laws in different states too. So that's another level as well that I ran into, because working in different states, there's different laws. So that's where I really found I need an advisor on top of my CPA that could give me that full package.
I appreciate you articulating that. And here's the quote unquote $1 million question. And I'm not going to ask for a specific number, but everyone's listening. Okay, there's a process, there's a cost, but what's the actual benefit? So Wendy, you went through this and you were paying a certain amount in taxes. I'll just ask a simple yes or no question. After you went through this process with Mike and Laura, did you pay what you feel was a significant less amount of taxes legally after their advice and guidance?
Yeah, so I'm going to give you kind of a rough around 45 that I was able to save. So, but I think, which was amazing to me, because that was a lot more than what I was expecting. But moving forward, the reason why I'm so excited to work with them is because long term, I think is just going to keep, putting money back in my pocket. So on top of that.
So it's not just a one-time transaction, it's an ongoing process. It's an actual relationship.
Right.
Okay. And then so I'd love to ask then Laura and Mike, after year one, what does the work encompass? What is it like working with you beyond year one? Because you have a new client, year one, you put your head down, you want to make sure you have your best impression, right? However, reality, once you have a client, I got them, quote unquote, already. They're already a client, and you slide off a little bit. Oh, I think, is Lucas going to come say hello? My son's here staring at me. You want to come say hi? I don't care. It's a live stream. Come here, dude. Come say hi. All right. There's my dude. I got daddy daycare this whole week, which is awesome. So Lucas, say hello,
my granddaughters are in town right now as well. We sent them to the pool today to make sure that the 9-month-old has a set of lungs.
I'm sure. I'm sure. Well, Lucas actually have a trampoline in the other room. He was jumping on the trampoline, like hoping the microphone didn't hear and whatnot. So this is real. This is a live stream. This is real. And this is why I work, right? This is my why right here. So hopefully we all have our why and our purpose and our mission with our business as a business owner, which is great. But let's go back to the question at hand, and I'll put myself on mute here for a second. So we have the first year experience. There's a lot of time, a lot of probably gathering information and sharing information to see where you are, right? And then you can develop a path and see where you want to go. And then once that path is proposed, then it's up to Wendy to say, yes, I want to go with that. Are you leaving or are you staying? Okay, he's going to go. Sorry about that. He's like, all right, I had enough of this. You guys are boring. Trains are more fun, right? He's going to go play trains. All right. I want to go play trains too, but here I am. I got to pay the bill so I can buy more trains, right? And play trains, right? So that's that. So after year one, what is the ongoing process like when you work with, and would you guys call yourselves tax attorneys, tax consultants, in addition to the CPA? Or is there more work behind the scenes with Wendy's current CPA? So you're going to let her go do her thing and you're working more hand in hand with the CPA behind the scenes throughout the year. And then at the end of the year, you get together as a team together and come up with a game plan for the next year? Or how does it work? Can you kind of explain the working process?
It also it changes by client, right? So we have some clients that kind of stay in their lane, and if they, and then I've got other clients that are constantly running into new endeavors. And so the client that takes on a new endeavor every quarter, then I hear from them a constant amount. The client that has got a business model that they stick to and they intend to stick to that for their career, then they feel like they don't need me once that they've mastered our protocol. However, we prefer to be engaged with them annually, regardless. But if we do our job well, then the benefit of the growth of the business is built into the tax plan itself. For example, as the client's tax rate goes up, then the annual benefits automatically go up without us having to change anything. And so now, with regard to the compliance, getting the transition from our work product to the CPA to get your tax returns done, we also help with the accounting function with the new industry, our new business model, in order to make sure when the accountant gets the records in order to do the tax returns, they literally have a complete accounting of that business model to help them facilitate their job to get the tax returns done. And so long story short is there's a flurry of activity in the beginning, and there's an educational process because people that work with us, I want them to know that they're doing it right, and I want them to do it right. We will defend our work product at our cost. And so I want to make sure that everybody's on the same page with what the rules are and how they apply. And so there's quite a little bit of activity that goes on in that regard. Once they've got it mastered, I don't want them to feel like that they have to be a tax professional. I want them to focus on their endeavor. And so we attempt to create a cash flow methodology and try to make it user friendly for them to where they can go back to focusing on what they're good at doing and what makes them the most profitable and the most successful. So, there is no time limit of which we're not available. So we're looking for lifetime relationships, and which means that there is no fee to contact our office and to set up a conference call on any tax related topic, which covers entity structure, asset protection, tax strategy, but also succession planning, estate planning. And those are things that you tend to grow toward as you mature in your business life cycle. So the long story short is there's a huge ramp up in activity, which somewhat declines. But we're here should you need us. But 5 years out, I only hear from people when they feel that they need something typically.
Thanks for clarifying that, Mike. And
And
I'm going to just let everybody know we're ending in 3 minutes and another 2-3 minutes. So we'll kind of bring it together. But Laura, what's your question?
I was going to say maybe Wendy can share her experience with how the process was on communicating with us and getting the answers that she needed, kind of how does she feel about that part of the process?
Yeah. So just as Mike was saying, there was a flurry of activity up front. And like, I got to tell you, they're super easy to get a hold of. They've been amazing, very responsive. We had several meetings. We were not all in the same location, so they were all over Zoom, which was very effective. And we had a consultation meeting, which I think is normally done in person, but because I was on an island, we did it over Zoom. And that was a very thorough meeting. They sent me information that I was able to read through, and then we went through it detail by detail. I was able to ask my questions. And then there's a lot of back and forth information via email. There's a portal that I access, which I always have access to any information that I need to read through. And then, just ongoing, they're also sending me contacts. So, hey, if you need somebody for payroll so it's kind of like I said, a whole package, but working together has been really good. A lot of work up front, like Mike was saying, and now it's just kind of, I think, getting streamlined.
Awesome. Well, thanks for sharing that. And I'll kind of bring it all together. So if you're a business owner and you're running your business every day, I would advise anyone, including myself, run your business as though you're going to be selling it tomorrow. Right. And so if you're running your business today, it's attractive. You've got your relationships with contracts versus no contracts. You've got an educated workforce. All your SOPs are down. Everyone knows what to do. So if you're not there, your business continues to hum, run, and grow. That's the way to run it. And so if and when you do actually sell it, when these guys come in, the hardest part, what I generally see from my professionals that do this type of work is like, we should have done this 5 years ago. Right. So Mike, kind of bring it home there. We're going to end this in less than a minute, but kind of bring it home for our listeners. Kind of, if you're a business owner, just some solid bullet point or two to kind of bring it all home, bring it all together.
Right. So the reason that your operations remain in your S corporation is because when you get ready to sell it someday, if you have to do an asset sale versus an equity sale, you would be subject to double taxation if you weren't an S corporation. So the S corporation advice that you got is correct, and that will help you with succession. However, succession is a complicated area. And so you want to get with somebody to prepare your balance sheet and to make sure that your business assets that are inside of the business are the best ones to be sold. For example, if you've got a manufacturing company and your building is inside of your manufacturing entity, we may want to sell the building separate from the manufacturing business. And so you hate to try to split those apart right at the last minute. If you've prepared those books and records separately, then you can package it for somebody to do the analysis and to maximize the purchase price for the assets that you want to sell.
I love that. So to keep this together, Laura, what would you like to bring in? And I will share contact information here at the end, but go ahead, Laura.
If you're looking to know what you don't know, there are companies like ours out there. And honestly, knowledge is power. So meeting with someone like myself or Mike, it wouldn't be a bad idea. But, I don't know what else to say.
That was perfect. That was perfect. So Wendy, anything you'd like to share at the end?
I like making friends. I like making friends. So, I'd be open to having a conversation with you about your current situation and see, if we can spark some savings and kind of take it from there. But, definitely get the knowledge.
Wendy, anything on your mind you'd like to share before we end it?
No, I'm just glad that I connected with them. And like everyone else is saying, I wish I would have done it sooner. So I definitely would recommend at least having that conversation.
So as soon as your business is starting to have some level of success, a business has that J hook, so to speak. You started out, you're going down, you're in the revenue hole, you have everything going out. It's not really coming in. Then it starts coming in. You start to breathe a little bit, this is actually working. Then you want to coast a little bit, just get your breath back, get all your capital back that you've invested in the business. Then you're like, okay, now I'm doing okay. Now you start, now I'm paying a little bit in taxes. Maybe it's time to have a conversation. So if you're in that scenario, or you're thinking of selling in 5 to 10 years, ideally at least 5 years out, this is the time to start having those conversations. So if you'd like to have a conversation, introduction, you can reach out to Laura and Mike directly on LinkedIn, or you've seen my website scrolling below, SWE90.com. That's short for Strategic Wealth Endeavor. That's my firm. If you reach out to me, I will easily get you in contact with Laura and Mike. And then Wendy, if someone has some questions for you, if they email me, I'll put them in touch with you. They can reach out as well. So this has been a great live stream. So Mike, Laura, and Wendy, thanks so much for joining us. I think hearing the comments, our listeners got a lot of value here. And I think we do it again in another few months and kind of share some more information tidbits for our clients. This is great. And everyone, thanks so much for being here.
Thank you, Brett.
Thank you.
Thank you,
Bye,
everyone.
guys. Have a great day. Reach out with questions. Thanks again.
All right. Bye.
Bye, guys.